Hi, my name's Ryan.
So the best property investment strategy for beginners in my eyes is rent to rent. There is no doubt about it that is quick to get into. You can acquire properties quickly, you can get them cash flowing positively very quickly, and you don't need much money to get started, which is, you know, the beauty of it. So the cheapest I've done is £400, and that was just, you know, a simple TV and some duvets, and then we run them on serviced accommodation. There's other strategies such as HMOs, which you can also do rent to rent on, and, you know, a real powerful strategy. In brief, how does it work? Quite simple. So we will go to a landlord or an estate agent and we will ask them if we can rent their property. Now, we're not going to rent them to live in, obviously. We're going to rent them to operate as a business and make money out of them. So we will pay market value for the properties, do deals, and, you know, we can comfortably pay market value for those properties by increasing the exit value, and we do that by hosting guests or housing multiple tenants in the same property. So a really easy strategy to pull off. The thing is, you've got to find the right properties in the right locations, which means, you know, you need to do a lot of due diligence, and you've got to be sure on your analysis and make sure that that analysis works as well. So really important to, you know, make sure that we look at that as well, which I'm going to come on to in a second. So I prefer the serviced accommodation option. This is where we run properties on Airbnb, as most of you will know it, Booking.com, TripAdvisor, Agoda, places like that. And for me, it just opens up more doors, because if you think about it, a HMO strategy is where we will rent a property and we then rent out each room as an individual unit and uplift the profit that way. Typically, you need a 5 or 6 bed house or more to make this work financially. So if you look on the average street, there's not that many 5 or 6 bed houses. Whereas the average street has plenty of 1-bed studios, 1 beds, 2 beds, you know, 4-bed terraces, 3 beds, semi-detached. There's plenty more stock in that region, and they all work incredibly well for serviced accommodation. So for me, that was my chosen strategy, because I had more volume to go after, and it meant I could acquire more deals quickly and ultimately put more cash flow into my business quicker. So that is where I started, and we will have anywhere from, you know, we always put a sofa bed in so we can maximize 2 extra guests. So if it's a 2-bed house, we'll sleep 6, 3-bed house will sleep 8, so on and so forth. We're just trying to maximize the heads on bed space. We will charge a per night rate, and then that per night rate can be anything from £65 a night up to, you know, some of our places £500-600 a night. So it just depends. So if we're paying, for example, let's say we're paying £500 rent a month on a 1-bed flat, and then we charge £70 a night for 20 nights of the month, then that's £1,400 we're going to bring in. We obviously cover the Wi-Fi, the bills, and the cleaning and the linen, but there's still going to be quite a bit of profit left in that. Now, the bigger properties, there's bigger scale, we charge larger amounts per night, and, you know, there's bigger upside gain on those. So that's my chosen strategy, and how I like to use rent to rent, how I like to rent properties off landlords, and how I like to spin it into a cash flow generating model. You can do it with the HMOs, where, you know, you would take, say, a 5-bed property for £1,000 a month rent, and then you would rent out each room for £500, £2,500, less your bills, etc, and there's upside gain there. Like everything, we have to factor in voids. We need to make sure that we've got maintenance covered, and, you know, more importantly, we need to make sure the demand's there. You know, so that is one of the biggest killers I see. People are taking on properties, they're overpaying for them, they're not checking the facts, they're not checking the nightly rates, they're emotionally investing, and they get caught out in the wrong side of things. And it's really important that you understand what works and what doesn't work. Now, the good news, I personally think that nearly every single property works for Airbnb. Location dependent, and how you actually acquire that property dependent as well. So for example, if you own a property, your mortgage is going to be less than rent. Now that means you don't need to be as occupied in certain locations to actually make a good profit. You know, you could be 60-65% occupied on an owned unit and still make a decent amount of money, certainly more than a tenancy. However, on the rent-to-rent strategy, which we're talking about today, you do need to be trying to find properties that are about 85% occupied or more to make a good profit from them ongoing on a monthly basis. Now, typically those are in cities and in places that have universities, they have hospitals, and you know, they have a population of around 100,000 or more. They tend to tick most of the boxes. Now, a couple of quick tips for you for searching in terms of Airbnb is: number one, check Airbnb, see what competitor analysis is around. If there's plenty of units in the location working, then you know that is a good sign. Number two is hotels. Hotels do a lot of research before they put any furniture into places, before they take ownership, before they sign leases, etc. So if they are in that location, then they will work incredibly well for you. Now, cities tend to push out, so I like to acquire fringe properties, as I call them. So yes, we've got stuff in the city, we've got the, you know, waterfront apartments, they look amazing, they attract the leisure guests, but as of late, the business travel has not been coming to those properties. During COVID, certainly not been there, but the fringe properties are still attracting your contractors, your business travel, those guys that just want to pull up, park outside, go in and, you know, just relax for the night and then go to work again the next day. But those properties also benefit from the fact that leisure guests will also book them, larger families maybe, or just people that want maybe a slightly cheaper option and they don't mind paying the, you know, the taxi ride in or the tube ride in or whatever it might be. So there is a whole host of properties that can work on this strategy. Now, really important that you get your analysis right. If anybody wants me to check over a deal, please feel free to drop me a message on Instagram at @officialryanluke. I'm more than happy to analyze a deal for you and, you know, make sure it works, make sure you're not going to get caught on the wrong side. I have plenty of videos on my YouTube channel which will also show you how to analyze an Airbnb unit, and you know, I'm constantly dropping content like this, so please make sure you hit the subscribe button. Now, rent to rent is a powerful strategy. I personally have built a 7-figure equity portfolio, really important, a 7-figure equity portfolio from the cash that I have generated from rent to rent in less than 2 years. Now, that was something that was never on my radar, but what I figured was the cash from the rent to rent units I started buying assets with, and it becomes a constant cycle. I hardly took any money out of the business. I continued to pump it back in and I bought more assets, and then, as I mentioned earlier, the assets earn much more money than the rental units. So I then had more cash flow coming in, which meant I could buy more assets, and the whole cycle just continues and continues and continues. So you just have to get started. You know, you just have to get started. You've got to find those first few units. You've got to solidify your systems and processes so you can run them smoothly, and then the cash you then use to buy your own assets, and then you continue to feed your rent to rents. Your rent to rents feed your assets, and so on until your portfolio is big enough. I've just completed on a building which I'll be developing into 16 flats, using the cash flow that I have generated, using the profits that I have made from my rent to rent business. It is an incredible strategy when done right, but it can also be a very costly strategy when done wrong. So really important that you understand what you're doing, and you know, as always, I'm here to help. I'm trying to, you know, help as many people as I can get to, but you know, if you don't ask questions and you don't get started, then you know, you can't get that help, you can't stay on the right track. So it's really important that you use the right information, listen to the right people, and for me, success leaves clues. So I have constantly been looking at people ahead of me, been working with people ahead of me, and been picking their brains. I've done this for at least the last 5 years since I started on my personal development journey, and it's, you know, something that I would encourage you all to get into. If somebody else is doing something well, then just copy them. You know, just see what they're doing, get inside their brains, understand what they're doing, and just copy it, especially in an industry like Airbnb rent to rent, because it is a very adaptable model that you can copy and it can scale quite quickly. You know, I took on 21 properties in my first 7 months. You know, I made a lot of mistakes doing that, but the good thing was I made a lot of cash flow, which meant I could quite quickly build a team when I realized the mistakes I'd made. You know, and no one's ever perfect, right? No one's, you know, I'm not standing here saying I'm the perfect Airbnb host or the perfect, you know, property investor. But what I have done, I've done it on scale, I have built a predictable business. I have built a sustainable business. Month by month, we get better and better. We generate more and more revenue, you know, and we're a scalable business. You know, we're continuing to scale. We're pushing into places like Dubai and Europe, and we're continuing to scale as much as we possibly can, because we have these systems and processes in place. Because we I looked up to people, I got help, I asked advice, and I started to refine my processes more and more and more. So really important. But the main thing is, you know, you're probably watching this video because you're at the start of your journey based on the title. So, you know, how can beginners get involved in this? This is how you get involved. You start researching, you start making inquiries to landlords, you start making inquiries to estate agents, and you will get a lot of kickbacks. You know, don't get me wrong, you will get a lot of kickbacks. That's part of this game. But if you keep going, you will eventually get a yes. That yes creates cash flow into your business. You continue that model, you play the volume game, you get enough yeses, you get enough property, you get enough cash flow, and then you start to build your brand. You know, whole different videos on that. I've got, you know, webinars and seminars on how to build a brand and how to create content for your property business to make yourself stand out. If you are interested in that, please just DM me. But the main thing is, right now, you just got to get started, and that means you got to pick the phone up, you got to search for the right properties. You more than likely need to get yourself a bit more education about how the intricacies of rent to rent work. But, you know, nothing that can't be found on my YouTube channel, nothing that can't be found on my Instagram page. Or, you know, if you really want some support, then head over to officialryanluke.com and make an application to work with me, and I'll show you exactly how to do it. I'll hold your hand, and that's what we do. But for now, that is Rent to Rent Explained. That's how I've used it to help build my serviced accommodation business, and I continue to still use Rent to Rent today. I did think at the beginning that I would just use it until I got enough assets under my belt, and then I'd kick it into touch, because I thought, why do I want to pay someone rent, blah blah blah. However, I have quickly realized that I can take on a lot of rent to rent units quite quickly. I can make cash flow from them straight away, because I know how to analyze the deals, I know how to make sure that they work straight away, and that cash flow then buys more assets. You know, it buys more buildings, it buys more apartment blocks. That then adds more cash flow into the business. So as long as that strategy still works for me, I'm going to continue to keep using it, and I suggest that you guys do too. You know, as Zig Ziglar once said, you don't have to be great to get started, but to be great, you've got to get started. So get off the fence, do something about it, use this information, reach out to the right people, get the help you need, and start your property business. And you just never know, in a couple of years' time, you might also have a portfolio that's worth 7 figures as well.